Good evening, everyone. I'd like to welcome you to the webinar that addresses the new loan program that was placed out by the federal government called the Paycheck Protection Program. This program is a loan opportunity for employers who need to cover certain expenses associated with their business, whether their business is actively open or whether or not they've had to close temporarily due to COVID-19. This will be a recorded webinar, but it will be available on the association websites if you have to refer back to it, and I will be sending it out to anyone who sends us an email requesting a copy of this presentation. The Paycheck Protection Program was released by the federal government to assist employers who have less than 500 employees. My name is Kelly Spencer. I am the president of T. Spencer Samuels Insurance and Financial Services. We have been working with the Marine Association across South Florida, helping employers with employee benefits, human resource questions, and a variety of services that we provide through our practice. So we will be presenting this today to review this program with you. Please take notes so that you have the opportunity to send us an email, which I will give you at the end of the presentation for any questions that you might have. So due to COVID-19, this is a Coronavirus Aid, Relief, and Economic Security Act, or what they call CARES Act. And part of that act is a program called the Paycheck Protection Program. They have established the guidelines for a new category of loans that is going to be guaranteed by the Small Business Association and or SBA, and it will be eligible today for business owners, which is April 3rd. The loans are intended to provide borrowers the much needed liquidity during these uncertain times, and notably, the principal amounts borrowed under the PPP may be entirely forgiven under certain circumstances, which we are going to review. We're also going to review the highlights of the Paycheck Protection Program that are set forth in this presentation. And we will be here to anticipate any questions that you might have as a business owner. So to begin, who is offering the loans? Currently, all authorized SBA lenders are qualified to offer these PPP loans. If you currently have a business bank that you do business with, they are stressing to please make sure that you're submitting your loans through your current business bank that you are doing business with. One of the reasons is it is easier and it's more streamlined for you to get the approval because many of your business bankers have the financial information that's necessary to file to get qualified for this loan. In addition, other certifications, applicants will be required to make a good faith certification. And this specific loan is basically helping employers receive the funds to retain workers and maintain payroll, make mortgage payments, lease payments, and other utility payments for their business. Here are the provisions. The loan amounts will be forgiven as long as you meet these qualifications. The loan proceeds for this loan must be used to cover payroll costs, mortgage interest, rent, and utility costs over the 8-week period that the loan is made. Employees and compensation levels are maintained is one of the provisions, and payroll costs are capped at $100,000 on an annualized basis for each employee. Due to likely high subscription, it is anticipated that not more than 25% of the forgiven amount of this loan may be for non-payroll costs. So this loan is driven to retain either your active employees or your furlough employees so that you are able to cover your payroll costs. It does allow for you to include other business costs like rent, mortgage interest, utility costs, and other things that we will be addressing later in this webinar. When can you apply for this loan? Starting today, April 3rd, small businesses and sole proprietors can apply for and receive loans to cover their payroll and other certain expenses through SBA lenders. With that being said, there are many, many lenders who have this program open, but because of the changes that have been made over the last few days, many lenders, even though they will be providing these loans, are not equipped as of right now to take your electronic application. So I recommend that you call your business banker and get an estimate on the time frame that they will be able to take your application. Starting on April 10th, independent contractors and self-employed individuals can apply and receive loans to cover their payroll and other certain expenses through current SBA lenders. There will be other regulated lenders that will be available to make these loans as they are approved and enrolled in the program. So if you have a business bank that is not currently in the program, you should call them and find out if they plan on being an approved lender. If they are not, then you can seek other means for the loan or other providers. Where can you apply? You can go to the website for SBA at www.sba.gov for a list of the SBA banks that are currently in the program to see whether or not your bank is part of this program. You then can submit your loan request through an SBA lender. Other regulated lenders will be available to make these loans once they're approved, like I said. So you want to consult with your local lender as to whether it is participating. Who can apply? All businesses, including nonprofits, veteran associations, sole proprietors, self-employed individuals, and independent contractors with fewer than 500 employees are eligible to apply. There are certain businesses that have over 500 employees, but that will be very specific to the industry and they'll need to check with their lenders. Also, hotel and food service industries, those who receive financial assistance from the SBA investment companies, also who are licensed by the SBA. What can I use these loans for? This is a very important part. If you remember, I said that 75% of the loan, they're preferring that you use towards your payroll costs. But that does leave 25% to cover other expenses associated with your business. So first and foremost, you have your payroll costs. Keep in mind that your payroll cost does include any benefits that are offered to your employees. So if you offer employee group health benefits and you subsidize those, the percentage that you subsidize will be part of this loan, and this helps you sustain your employee group coverage for those employees who are currently covered. Other items are rent under the lease agreements, anything prior to February 15th of 2020. Also, interest on the mortgage, anything occurred before February 15th of 2020. Also, utilities, for which service began prior to February 15th, 2020. So these are the 4 categories that you will work with your business banker with to determine what your payroll costs are. Please don't forget to include your contribution to your employee benefits, the interest on your mortgage, not the actual payment, rent, as long as it's under some sort of lease agreement, and of course, utilities. This is what is counted towards your payroll cost. It is actually quite a few items. Employee benefits are included for vacation, parental and family, medical, sick leave, separation and or dismissal, payments required for the provisions of group health benefits, including insurance premiums, and payments of any retirement benefit. So if you're doing a match on a 401k, then this would be included. Also included are salary, wages, commissions, or tips. This is going to be capped at $100,000 on an annual basis for each employee. So that is actually very aggressive. It's a great program, but it does cap at $100,000. Also, state and local taxes assessed on the compensation. For sole proprietors or independent contractors, wages, commissions, income, and net earnings from self-employment, and again, capped at $100,000 on annual basis for each employee. That is just one part of what is included on just the payroll costs, which is actually very comprehensive. So it is not just going to be on the actual salary. You want to make sure that when you're working with your business banker, that you're including all of these items as part of your payroll costs. How large can my loan be? Loans can be up to 2 months of your average monthly payroll costs from the last year, plus an additional 25% of that amount. So they're going to take an average of your last 2 months payroll and add 25% to that amount. And that is the amount that you will be approved for the payroll portion of your loan. There is a $10 million cap on the payroll loan amount. If you have seasonal or new business, you will use a different actual time periods for your calculation. And again, you can work with your business banker on that calculation. Payroll costs will be capped at $100,000, again, annualized for each employee. This is the biggest question that I'm getting. How much of this loan will be forgiven? You need to be very, very careful because they are not going to ask for this information right away, but they will be eventually asking for this information and documentation. So you want to make sure that when you're doing your calculation with your business banker, you're ensuring that you understand from the beginning how much of the loan that you receive will be forgivable. You will owe money when your loan is due if you use the loan amount for anything other than payroll costs, mortgage interest, rent, utility payments over 8 weeks after getting the loan. Due to likely high subscription, it is anticipated that not more than 25% of the forgiven amount may be non-essential costs. You will also owe money if you do not maintain your staff and your payroll. Now, as long as you are not terminating your staff, if you retain employees even part-time, that will ensure that a portion of this loan is forgivable. Number of staff, your loan forgiveness will be reduced if you reduce your full-time employee headcount. So it is in your best interest not to terminate. Try to furlough whenever possible. And instead of furloughing your employees at 100%, consider taking their hours down versus terminating or furloughing so that they are showing active on your payroll. Your loan forgiveness will also be reduced if you decrease your salaries and wages by more than 25%. And for rehiring, you will have until June 30th of 2020 to restore your full-time employment and salary levels for any changes made between February 15th and April 26th. So if you have additional questions on this portion of it, this is a very important portion. This is what loan amount is going to be forgiven. You can get a higher loan amount than what you anticipate actually using, but please keep in mind that the actual forgiven amount is going to only be forgiven for the items that we have previously reviewed. How do you request the loan forgiveness? You can submit a request to the lender who's servicing the loan. The request will include documents that verify the number of full-time equivalent employees and the pay rate, payments on your eligible mortgage, lease, or utility obligations. So you want to make sure that you are retaining good records because they will ask for documentation after the loan has been issued. The lender must make a decision on your forgiveness within 60 days of you submitting the documentation. You must certify the documents are true and that you used forgiveness amount to keep your employees and make eligible mortgage interest, rent, and utility payments. So specifically, those are the records that you want to make sure that you are keeping very close attention to starting on the February 15th date. Here are some commonly asked questions associated with this loan, the PPP. Do I need to personally guarantee this loan? No, there will be no personal guarantee requirement. Do I need to pledge any collateral for these loans? No, no collateral is required. Whoever thought there'd be no collateral required? When is my loan due? Your loan is due within 2 years. And what is your interest rate? Will be 0.5% fixed rate. So why am I saying this on a forgivable loan? If you take out a loan for $20,000 and when the loan is completed and everything settles, you used $15,000 of that $20,000 for qualified expenses, then the remaining $5,000 will be on a fixed interest rate over a period of 2 years. All loans are underwritten exactly the same and everyone has the same terms. 2 years, 0.5%. There is not different loan requirements for one company versus the other. This is a streamlined loan process. So everyone has an equal playing field and everyone has the same exact terms for their loan. When do I need to start paying interest on my loan? So your ultimate goal is to make sure that once you receive your funds, you are tracking all of your qualified expenses that go towards the forgivable percentage of this loan. But for the amount that you have taken out that is not going to be forgiven or estimated to be forgiven, all your payments will be deferred for the first 6 months. However, your interest will continue to accrue over this period. So very, very important is something we do want to stay on top of. We want to make sure that you get the highest percentage of your loan forgiven and to make sure that the least amount is left over due to the interest and the accrual of the interest. What do I need to certify this loan? Current economic uncertainty makes the loan necessary to support your ongoing operations. The funds will be used to retain workers and maintain payroll to make mortgage, lease, and utility payments. You have not and will not receive another loan under this program. You will provide to the lender documentation that verifies the number of full-time equivalent employees, payroll and dollar amounts of payroll costs covered, mortgage interest payments, covered rent payments, covered utilities for the 8 weeks after receiving the loan. So you want to make sure, like I said, that you keep very close documentation. They have streamlined this loan very efficiently. And because it covers very specific items, it should be easy for record keeping to obtain and file these loan provisions. Loan forgiveness will be provided for the sum of your documented payroll costs, covered interest payments, rent, and covered utilities. Again, due to likely high subscription, it's anticipated that no more than 25% of the forgiven loan amount will be for non-payroll costs. What does that mean? You want to make sure that your payroll costs are perfect down to the penny. That is going to drive 75% of the forgivable amount for your loan. All the information you've provided in your application and all your supporting documents and forms is true and accurate. You have to certify that it is true and accurate. Knowingly making false statements to get a loan under this program is punishable by law, which I'm sure will not be a problem for all of our employers, because just supporting the payroll, the health benefits, and your overhead expenses associated with mortgage, utilities, and rent is a very comprehensive loan program, especially for a loan where they are allowing forgiveness. For the amount that is not forgiven, 5% fixed interest rate over 2 years is a very aggressive and rich program. If you anticipate that you need additional funds over and above the allowable for forgiveness, please don't hesitate to take these additional loans. Just ensure that you understand the loan provisions for forgiveness. Make sure that when you are taking out the loan, the percentage that you don't anticipate will be forgiven, that you understand the payment structure, and it is something that is affordable for your company. Again, T. Spencer Samuels Insurance and Financial Services has been helping the marine industry and other marine and other employers within our community for the past 20 years. And we are here to answer any questions that you might have and guide you in any way that we can. We are working very, very close with your associations to ensure that we are getting them all the updated information necessary, because it is an ongoing fluid situation where guidelines are changing. We are going to have more and more presentations associated with the different loan programs coming through. So please check your association websites to ensure that you are obtaining the most updated information. We will be dating it, or we will tag any of the updates so that if it is a change based on the programs that we have already explained, you will understand how those changes affect you or your loans that you have already submitted. Thank you again. We really appreciate the opportunity. Thank you for listening. We very much hope that this helps. If you want to contact us, we can email you this presentation directly, but it will be available on your association websites. Thank you very much and have a wonderful day.